Good morning, and thank you for joining Camco Invest online investor meeting today, where we'll where we will be discussing the company's performance during the first quarter of 2023. My name is Mohammed Akbar, and I am part of the marketing and investor relations team at Camco Invest. Joining me are our CEO, Mr. Faisal Sarko, and our CFO, Ms. Hana Taha. Our agenda for today will cover a brief introduction on the company, an overview of the events that took place during the period, highlights on the company's business and financial performance, and finally, we'll close by answering any raised questions. If you'd like to ask any questions during the presentation, feel free to use the Q&A option, and we'll be more than happy to answer them towards the end. All right, so we'll now begin with the company overview. Camco Invest is an independently managed subsidiary of KIPCO Group and adopts the highest standards of corporate governance while providing a comprehensive range of investment solutions. We are headquartered in Kuwait and licensed by the Capital Markets Authority and Central Bank of Kuwait. We're also listed on Borsa Kuwait and traded under the ticker Camco. Our primary business offerings include asset management, investment banking, and brokerage services. As for our regional presence, we have licensed offices in the UAE and Saudi Arabia, in addition to our rep office in Turkey. As of March 31st, 2023, our assets under management reached $14.2 billion, whereas our investment banking mandates since inception amounted to $35 billion. At Camco Invest, our strategic approach has well positioned us to better serve our clients. This approach is comprised of our effective placement power, broadening regional footprints, diversified comprehensive offerings, in-depth market insights, strong track record, multi-industry experienced professionals, and adoption of a customized client-driven approach. On the global economic front, GDP growth rates saw a downward revision, reflecting lack of confidence in economic growth, especially after the banking crisis that took place in the US and Europe. The economic downgrade also affected crude oil prices, which remain crucial for the GCC economy. As a result, GCC markets are now expected to show a smaller GDP growth rate, mainly led by lower oil-related activity, while non-economy continues to thrive. During the quarter, oil prices dropped to a 50-month low towards the end of March 2023, led by fears of an economic fallout form from the US and Europe. Oil prices closed during the quarter at $79.19 per barrel, after a steep recovery during the last week, as shown in the oil price chart on the bottom right corner of the slide. The quarter also saw 2 interest rate hikes by 25 basis points, each from the US Fed, as inflation remains elevated. These rate hikes were largely replicated by central banks in the GCC. The Central Bank of Kuwait also raised its discount rate by 50 basis points. Coming to the financial markets performance, global equity markets witnessed gains during the quarter, with the MSCI World Index up by 7.3%. The increase was broad-based, as most key equity markets witnessed gains, as seen on the chart on the left-hand side of this slide. In the GCC, however, the performance was mixed, and the decliners mainly reflected a drop in oil prices, in addition to a fall in prices of large cap sectors like banks and capital goods. Borsa Kuwait's all-share market index was one of the decliners, with a fall of 3.3%, almost in line with the 2.9% decline in the broader MSCI GCC index. Now I will hand it over to our CEO, who will provide you with insights on the key aspects of the business during the quarter.
Thank you, Mohammed. Thank you, Mohammed. Good afternoon, everyone. Okay, so we're looking at the quarter 1 results here. You can see elements from the income statement and the balance sheet. It's been a tough first quarter, I think, for most investment companies in general. The sector has had a difficult first quarter. We'll talk a little bit more about expectations, but if we look at the numbers for the first quarter, the company had a loss of 1.6 million KD in the first quarter, which amounts to 4.57 fils per share. The comparison between the first quarter of 2022, and we have to keep in mind that the last 2 years have been much better years, generally, economically speaking, market speaking, and you've seen some of the data on the markets and what we are facing, a difficult time. Fee income during compared quarter to quarter has dropped by 32% almost. The associated expenses and G&A in general has also dropped. However, the quarter had a loss compared to a profit of 3.6 quarter to quarter. From the balance sheet side, Camco continues to do its investment activities. The cash accordingly has dropped by almost 10.5%. The total assets remains around the same level. The liabilities also around the same level, and shareholders' equity only dropped by 2.7%. Accomplishment during the quarter. One positive note with the growth of the business and other aspects, that assets under management grew by 2.7%, which made it reach $14.2 billion. If we look at the performance on one of our key business areas, which is the equities and fixed income, our equity funds and managed portfolios continue their competitive outperformance of the benchmarks that are there. The key funds that we have during the first quarter have been in the top tier, with Camco Premier Market being the second best conventional, KIF being the fourth best conventional, and the Durra, which is the Islamic fund we have, being the best Islamic fund. So maintaining performance has been a priority and has been achieved. On the real estate front, there has been a slowdown. However, the team is working on new deals and new ideas and initiatives. Still, the portfolio stands strong at 1.8 billion, 21 assets across US, UK, and Germany, with a total area of 4 million square feet. The current annual distribution is at around 7%. We mentioned this in the past. It's an ongoing process on the venture capital. The JEDI Fund continues its initiatives and it's during this year going to be closing, hopefully, its capital raise. The private equity side continues to liquidate certain assets as it's in liquidation stage for a bulk of the portfolio. The team, however, has been looking at a good pipeline of PE deals. It's a healthy pipeline that we see with deal flows working on new initiatives and products. We participated during this period in a pre-IPO opportunity Series C investment round that was raised by Flowered, which operates in 37 cities in 9 countries across MENA and the UK. So we're pretty excited with the direct deals that are coming across. This is the first of more to come, inshallah, for our clients. The investment banking side, of course, you know, having ECM, DCM, and M&A, there's a diverse array of work that is being done. They continue their work. They successfully closed the largest KD bond issuance in the real estate sector in this quarter. The several transactions that will close during 2023, sorry, here it says 2022, but 2023, across the 3 areas I mentioned, which is the equity capital markets, debt capital markets, mergers and acquisitions. So there's a healthy pipeline in the IB that will evolve during the year. Looking at the brokerage side, of course, this is a service that we offer through Al-Ula Wasata, which is our brokerage arm, which continues to strengthen its competitive position with the market and attracting new clients. However, it's important to note that there has been a decrease in liquidity on the Borsa Kuwait, which also reflects in the company's trading value and commission income for that quarter compared to the quarter of the first quarter of 2022. On the regional offices, I think here we have a continuous effort to strengthen the presence and those respective markets. And we're focused, of course, on Saudi Arabia and the UAE. Now, they have continued to contribute to the company's core businesses. Two key events or announcements we'd like to highlight, which is one, having a new CEO in Saudi to spearhead the expansion effort in the Saudi market. We're pretty excited about that. Plus, the cementing of the plans of relocating to KAFT, it's a prestigious area in Riyadh, King Abdullah Financial District, and we expect to be officially there and operational from the new location in September, October of this year. So that's in a nutshell, focus on the regional offices in Saudi. We don't mention UAE, but as we said, we continue to have the contribution in the core business. Chart that we raise that we highlight every quarter as well, which is the trajectory. Still, we mentioned there has been a growth in the AUM since the last period, and healthy growth rate, double-digit growth rate since the inception, which continues the story of Kamco as we grow our client base, our services, and products accordingly. That's it, I think, from my side. I think Hannah will take over to go into more detail on the performance.
Thank you, Abu Bader. Hannah, if you may.
Yeah. Thank you, Abu Bader. Next slide, please. Fees remain the core of our income, and fee income dropped by 31.9% from 4.8 million KD to 3.3 million as of Q1 2023. Total income also dropped by 71.2% from 9.2 million to 2.6 million as of Q1 2023, mainly due to decline in equity market. The net gain on financial asset at fair value through profit loss declined from 2.3 million as of Q1 2022 to loss of 779,000 as of Q1 2023. Share of result also declined from 1.8 million profit as of Q1 2022 to 635,000 loss as of Q1 2023. General and administrative expenses dropped by 27.6% from 4.8 million KD as of Q1 2022 to 3.5 million KD as of Q1 2023. General and administrative expenses to fee income stood at 1.06 times in 3 months ended 2023. Finance costs increased from 528,000 KD as of Q1 2022 to 677,000 KD as of Q1 2023, and this is mainly due to increase in the interest rate. The profit for Q1 2022 was 3.6 million, dropped and declined to 1.6 million loss as of Q1 2023. For the financial position, total assets remain almost the same as of the level of 129.4 million to 129.1 million as of March. Cash and cash equivalent represented 25.8% of the total assets. Investments to total assets represent 58.6%. Cash and cash equivalent decreased from 37.3 million as of December to 33.4 million as of March 2023. In the liability and the equity, total liability also remain in the same level from just a minor decrease from 63.4 million to 63.2 million. Owner's equity stand at 60.8 million. It is decreased from 62.5 million to 60.8 million as of March. Net debt to equity 0.19 times, and compared with December 0.12 times. Credit rating by Capital Intelligence as of May 2022, BBB long term, A3 short term, and stable outlook. Thank you.
Thank you, Hannah. We will now be taking questions. There are several questions that were shared. We will begin with the first one. What are the reasons behind the drop in fee income? Bobadil, if you could take this one.
Yeah, of course, we are a fee income focused business. And as mentioned, we are focused on the asset management side, investment banking side, and the brokerage side. In all aspects of our business, we have this diversified model, which helps in maintaining a healthy mix between the fee income that we're generating and how we are handling the associated expenses to these. Now, you have to keep in mind that the income generated from our investment portfolio is impacted by market performance. And markets have dropped strongly in the first quarter on the backdrop of reduced business activity that stems from the negative market sentiment, not just in Kuwait. You know, we are MENA-centric with some of our business activities, and as we mentioned, in the real estate side and in different parts of the world. That business activity negativity has been through this level of interest, the high levels of interest that are being faced globally, the high inflation rates that have also faced a lot of economies, including ours, and of course, major concerns about potential recessions that we are hearing. At the end of the day, the market environment has not been a positive one, not to Kuwait, not to the region, and for sure, not globally. We saw some of those data points in our presentation, but I'm sure a lot of analysts will review and concur with this kind of view. However, we still are comfortable with our diversified revenue model and ability to move forward.
Thank you, Bobadil. We have another question. What are your expectations for the year? If you could also take this one.
I think we ended last year being cautiously optimistic, and the caution is increased, of course, but still the optimism is there. We were expecting a difficult first quarter with potential improvements in the second quarter. I think still there's a spillover from that negative sentiment from the first quarter to the second quarter with significant volatility, significant issues. If we are to look at the rest of the year, I think the second half of the year, which we hope will be better than the first half, and improvements should be seen. Now, when we say cautiously, again, it's not just related to Kuwait or the region. There's many and numerous global impacts. I highlighted some of them that make us cautious. It's the interest rate environment and the direction of that stabilizing and hopefully moving downwards, the control of inflation. So there's, amongst other things, multiple issues that make us cautious in our expectations, but we do have some sense that hopefully the second half will be better than the first.
Thank you once again, Bobadil. We have another question related to associate companies. Loss remains unexplained. Hannah, if you could take this one.
Some of our associates impacted by the decline in equity market, mainly our investment in funds, associate in funds. So this fund is impacted by the decline in equity market. That's why you can see the decline in the line of the share of result of associate. It is even the same like the fair value, the net gain and fair value through profit loss. Thank you.
Thank you, Hannah. We have another question related to assets under management. And the question asks, is it new money or simply market-related growth? Mubadil, if you'd like to elaborate on that.
No, I think not. I think at the end the markets have gone down. The markets we're in, and as you see that has impacted our investments, which also impacts, of course, the size of our AUM. However, new money came in the first quarter. So I would say that it is new money that has impacted our growth in AUM.
Thank you, Mubadil. We have sorry, 1 second. We have more questions coming in. What are your expectations for the year? Mubadil, if you could take this one, please.
Expectations for the year, of course, you know, as per regulations and as a listed company, we cannot talk about numbers. What we can talk about is expectations on the economy, right? Or on what's going on. Of course, I mentioned earlier on that we are cautiously optimistic for the second half of the year. However, it's very fluid, and this is something we'd have to keep a close eye on. We need to see a global control of inflation. If that is not happening, then the interest rate environment will be for longer going or staying at this level. We have reached interest levels of what happened in 2008. So we've seen the impact, for example, in the banking sector in the US on the regional banks. We've seen other sectors also being impacted by this, and that kind of impact globally also filters down to us. Of course, on our side as well, the oil sector has been impacted. However, we have to also keep in mind that the demand still exceeds the supply, and there is a need on the oil sector to be investing in the sector. So it's a mixed bag of things that form our expectations, but we, as we highlighted earlier, are cautiously optimistic for a better second half.
Thank you, Mubadil. We have other questions that are forward-looking, and due to that, we are sorry we can't answer them at this time. And with that, we come to the end of our investors meeting for the first quarter of 2023. Thank you all for tuning in. If you have any additional queries, please visit our investor relations section on www.camcoinvest.com or send an email to investors@camcoinvest.com. A copy of this investors presentation will be available under the IR section of our website. Thank you once again, and I hope you enjoy the rest of your day.
Thank you.
Thank you.